but it's 873 total, including pork, beef, and poultry.
Hi again, everybody. Welcome back to the Comstock channel. Boy, it's always a pleasure to visit with you about the ag markets. Today is Friday, so we're going to see how we closed up the week in the ag trade. It was kind of a give and take day in the grain markets. I see a plus sign in soybeans. The corn and wheat just couldn't quite hang in there. But all in all, kind of a mixed bag. Wheat was on both sides of unchanged during the day, and it looked like maybe we had a fairly constructive close in the livestock trade as well. So we're talking with Eric Relph of Comstock Investments. And Eric, as we headed into the weekend there, was that constructive or was that kind of a waste of time on Friday?
Well, I don't know. It's going to depend on what the headlines say over the weekend. But before we get into too much of those details, I wanted to ask you what you had on your crystal ball today, because Wednesday in our meeting, you kept pumping the issue of wildfires in the panhandles. And then today we've got outbreaks of wildfires in the panhandle. So if you could tell me what markets are going to do next week, that'd be great. Or any other advice you might have that could make some money would be fine too.
I follow numerous meteorologists that were just scared to death of wildfire breakouts this week, along with severe weather. Now we're recording this kind of right as the markets close here on Friday, but the prospects are for just colossal severe weather outbreaks tonight and Saturday and into Saturday night, maybe even into Sunday morning. It could be a near historic tornadic outbreak event. I hope everybody stays safe. They're even talking large hail all the way from the Gulf up to, Michigan. So thoughts and prayers to everybody out there. I hope everybody makes it through this weekend safe. It's going to be a rough ride. That being said, Eric, that means most of the Midwest will probably get moisture, but I don't see anything benefiting those southern plains that you were talking about, except for a lot of high wind.
Yeah, and as we speak here, we're a little earlier than we would normally be on a Friday, so that I can jump in the truck and drive 500 miles straight towards it. So I'm gonna drive from Northwest Iowa down to Northwest Oklahoma today and tonight. Hopefully get there by about midnight, and hopefully not get run out, because they are right on the cusp. If that wind's going the right direction, southwesterly winds would push those fires right up into their area if they continue to have trouble with that. So it's seeming, and the wheat kind of tried today. We saw some decent gains at times. I know at one point I saw the Chicago up 5-6 cents while the KC was up 9 plus. So we were trying today to recognize that there's some potential out here, but the SRW country is basically from the Midwest line, is what I like to call it. Iowa, Missouri, Arkansas, east. That's your SRW country. Supposed to be decent rains east of Mississippi longer term, if you listen to the climatologists and look at those long range forecasts. So I have a hard time thinking that they're going to have a lot of trouble, but that HRW country could be in some big trouble. And I don't know if they're going to pull cattle off. I'm anxious to see what that looks like on my drive home the first of next week, to see if they've pulled a lot of those turnout cattle off, or if they're going to continue to graze it and walk the money to town in the form of cattle, rather than take it in trucks in the form of wheat and grain. So a lot of variables right here for the HRW especially. I've had a lot of speculative inquiry about long positions in wheat, and I think people say wheat, but they mean the hard red winter wheat. I think they're seeing this as a potential problem moving forward. And it has been so hard grazed over the winter that there's a lack of potential there just from that, especially if we don't see some moisture there. They've already seen several 80-degree days, blocks of days where they've hit 80 degrees. And so with that, if you could get some moisture along with it, that'll pull it out of dormancy real nice, and you've got something to work with. Otherwise, they're probably going to keep just chewing on it via the cattle, that is.
Well, on the first day of Commodity Classic, when we had that in Denver here about a week and a half or so ago, it was pointed out that there was just a horrendous dust storm in New Mexico and western Texas that day. And so the stage is already set for some issues like that. Boy, be careful if you're driving down that way. I mean, I grew up in Kansas, and I've been in one of those dust storms trying to drive, and you can't even see your hood ornament on the vehicle. I just darn near ran right into the back of a police officer who was parked in the middle of the highway with his lights on. So, yeah,
Yeah.
it can be very dangerous out there. So I wish you well on that. But I'm curious to hear what you had to report next week if
Yeah.
we get a chance to talk with you about that. We don't even know yet what the result is from that severe freeze event that we had this winter out there in the high plains. I mean, temperatures got down into the what, 20, 30 below range out there.
Yeah. I mean, even they had 25 below zero wind chills in Woodward, Oklahoma. They're not, that's not normal for them. And which is where I'm headed. But it was extreme everywhere. And, we get those kinds of things going on up here in Northwest Iowa. My house is 8 miles from the Minnesota border. And so to get 35 below wind chills is not abnormal on a given winter. It's not consistent, but it's not abnormal. But for those areas to get those kind of temperatures, that's really unusual. So it will be interesting to see. And there was no snow. There was nothing to insulate it. So if there's a potential for winter kill of all years, we talk about, the winter kill, but then it's fine. If the potential actually exists, this will be one of those years.
Also, I've been hearing several meteorologists talking about the possibility of a big derecho event going through the central corn belt this weekend. That's kind of odd. You don't hear about that until usually maybe June or July or something. Kind of a
Till the
weird time of
corn,
year for that.
yeah, till the corn's big enough to suffer from it. That's usually when
Right.
it
Yeah.
happens, right?
Green.
Unfortunately, there's a lot of structures and infrastructure regarding the grain industry that can suffer from those situations as well. And, the property and casualty insurance business in this part of the world has just become an absolute nightmare. AIPs pulling out of entire states, certain counties, numerous instances where people have to increase their deductibles to 5,000, 7,500, things of that nature, just to keep the premiums within reason, where they used to have a 1,500 or to maybe $2,500 deductible. And so I would hate to see if we get another extreme event like that, because that was one of the things they specifically pointed to when they took the rate increases over the last 2 years. Was there was two derechos in a 5-year span, and the worst of those being in 2020, of course. And then there's been other smaller events since then throughout Iowa and Illinois specifically, and some of the outlying areas as well.
Even though I'm looking at Kansas City wheat here at the moment, and even though it had a bit of a hiccup going into the weekend here, do you think that was possibly just profit taking? Because, I mean, all in all, we had a higher weekly close than what we had last Friday when we talked.
Yeah, and actually the trend doesn't look bad, even though we finished lower on the day here. So yeah, taking a look at that May Kansas City chart, I mean, it was really a nice setup, and today didn't do any damage. I mean, you still had a higher high, higher low for the day, but you can see here for the last 9 sessions, we've been pulling off of that low that we made last Tuesday when all the grains made their big lows for the move. After that steep fall off that was just nasty. And we did come back and hit a 50% retracement today, finish higher for the week. Flip over to the weekly chart here just to take a peek at that. You can see here, finish higher for the week after finishing well off of the low last week. So not a bad look. And even though it maybe feels like wheat is a little dogged right now, still a decent performance and making new highs consistently throughout the last couple of weeks.
What do you think about the spread between Chicago and Kansas City now?
It was a little too far out of whack. Now it's getting a little more within reason. I mean, you've got the May at almost a 30-cent spread here. And I've actually been targeting this general area. I've actually been looking for about 36 cents to get real precise. But I do have a trade that was put on to our subscriber service, our premium content subscribers, to play that spread. And we put it on at 8 cents, and now it's out to 30. And so I'd like to see just a little more push on that, and that'll probably be enough to punch the cash register and take that trade home.
The wheat tried to come back. It couldn't quite make it all the way back by the end of the day on Kansas City Wheat Friday.
Mm-hmm.
Let's talk about the corn. What
Yeah.
kind of a performance would you consider on the corn here this past week?
Poor, not great, but corn has become a little bit more susceptible to some of the trade headlines, particularly regarding Mexico first, and then the EU. I mean, this jab down here 2 days ago was due to the headlines about the EU tariffs. Today was the lowest finish of the week. That's why I say not a good look. I mean, if we flip over to the weekly chart and you'll see it was a lower finish, although we're still a ways away from last week's low that we made on that Tuesday, but still a sharply lower finish for the week, and not a real good setup there as we come closer and closer to the prospective plantings report. And so I have to be concerned that maybe that's not going to be a good setup for corn, as it's one of the only crops in the country that pencils. I'm talking to people in the Mid-South, and you have cotton producers. They're going to plant cotton because they have an interest in the gin. They have $1 million cotton pickers. They're going to use them. But rice and corn are the only thing that pencil for them. And we don't have the flexibility for crops in most other areas of the primary growing regions that they do down there. So that really favors corn.
Okay, if that's the case, then how would you consider the close on beans? They were higher on the day, so kudos to them. But what does that mean?
Beans did nothing this week, in my opinion. I mean, we went down. We tried to challenge last week's low in the beans. We got within a nickel or so, 6 cents, something like that. But the beans just couldn't go anywhere. Nice little finish to the day, but still proves nothing really. And it sounds like things are going to heat up with China, which would probably give us a good segue into the livestock, as we're seeing headlines today that are a little less than favorable for U.S. proteins.
Well, we can do that and transition over to livestock. I did want to mention one thing back on the corn. I saw it was under pressure here on Friday, but there is a little bit of maybe some supportive news out there where it seems like what rain had been expected in parts of eastern Brazil may not materialize now as much as what they had thought earlier. So that could be a bit of a concern for the safrinha corn, right?
Yeah, absolutely. I mean, it is too early to get overly concerned. They still have plenty of time to draw some moisture, but when they don't have timely rains, that becomes a big deal, because rain begets rain. And so when they're due for one, especially down there where they get seasonal rainfall, if that season gets delayed, it becomes a bigger and bigger problem. And I'm sure Matthew will elaborate on that more next week. But missed the first round, so hopefully the second round's quick behind. And right now it doesn't look overly likely, at least for the short term.
Do you think that provides kind of a pretty firm base of support in the corn then moving forward now?
I think from a technical and fundamental standpoint, last week's low should provide a firm base for support. Now, in the case of the May contract, that's 442, still about 14 cents below us. But as we've seen over the last couple of weeks, I mean, we can do that in a day if we need to. If that gets taken out, then we've got trouble.
Good point. We did have good export business, though, last week.
Grain export business last week was fantastic. Both the loadouts and the weekly sales were amazing. And this, maybe the biggest surprise was that soybeans and wheat kind of led the way. Corn's still good, don't get me wrong, and it has been good for a long time. But the surprise was the wheat, I think, at the most. And this is seasonally a time when we start to lose a lot of soybean business, and we still had a nice weekly sales number.
All right, so let's flip the script here. Let's take a look at our livestock trade. It looked like we were higher across the entire cattle complex. Hogs, again, were just kind of mixed heading into the close. Let's start first on the cattle. High winds, fire danger again this year. That's not a good sign. And, I remember a few years ago when we ran into that situation, and then we started losing pasture ground and hay supplies and that sort of thing. I hope we don't go through that again.
Obviously a huge concern, and especially when you're coming into, believe it or not, I mean, the potential is there every year. This just happens to be the bullseye year for Owen Taylor's 89-year drought cycle. And, with what's going on right now, I'm talking to a client from north central South Dakota just a little while ago who's trying to make all of his crop insurance decisions. And he's really, really worried, as are many people. It's very dry. We were fortunate enough to get a couple of really wet snows with a rain mixed in here in our immediate area. And so that's kind of helped things a little bit. We do have some tiles running in this part of the world, albeit slowly, but still there's moisture there, That's not the case for everybody. And so you're seeing a lot of buy-ups in the crop insurance, especially with market prices where they're at. And so what does this look like moving forward in what could potentially be a record type drought year? it's a little scary.
Well, feeder cattle, we made new contract highs or historic highs again this week. Live cattle, no. I mean, we got a little ways to go there if you want to try that. Why is that? Why that divergence?
I think it's cash driven, honestly. Everybody's been talking about the why of it all. And the reality is that feeder cattle cash has been absolutely on fire. And we still are a little under cash in the March contract, even after being up another $1.75 today. But I want to point out a technical marker that I've been watching here on the continuation chart. And on January 28th, we made a high of 282.25. Yesterday, we made a high of 282.20. So we were 2 ticks away from that spot. That is a double top by any technician standard. And then we finished $2 off the high. Well, today we come back, we take $1.75 of that back. If we fail to go bust a new high to start next week, and instead we see a slide lower for whatever reason, and China delisting several hundred, almost 1,000 different protein plants, be it poultry, pork, or beef, could be the catalyst for that setback. You always need a fundamental trigger to make the technicals come to fruition. That may be the trigger. Although today, market just shrugged it off, no big deal. I know there was other advisory services putting out some speculative sell advice. Don't know if that'll be right or wrong, but there's definitely potential from these prices. Now, again, the cash has been really hot. I have a client in Kansas that sold 924 pounders for $2,500 a head this week. The numbers are just astronomical, especially for these green cattle coming off of wheat. And the live cattle, we still haven't had enough confirmed trade to set the market in any of the 4 reported feeding regions yet this week. And we are talking on Friday afternoon after 1 o'clock. The chances of that being reported before the 2 o'clock reporting deadline are growing slimmer by the minute. And if whatever we see after 2 o'clock won't be reported until Monday officially. So you get my point. They may be holding off to pay higher money till after that reporting deadline to delay the public knowledge of it. But regardless, we've not seen enough to set the market yet. And asking prices are well above the bids currently.
No matter how you look at it, though, I mean, I'm just wildly impressed with how the cattle market has held together. And like you said, the feeders made new highs this week in the face of a collapse in the equity markets. I mean, that's just amazing to me. They used to be kind of tied at the hip. Now they're just totally independent the way it seems.
Yeah, and I think maybe the lower corn market today, along with these higher equities. I mean, you can see here the S&P's up 100 points, just a huge up day. Took back all yesterday's losses plus some. Could have the highest close that we've had in 4 days here. So there was reasons today. Now, not every other day. There were a lot of days where grains are higher, equities are lower, and the cattle were still higher. So I'm not saying that that's the only influencing factor, but it was surprising to see some of the trade that went on this week in the cattle, given the outside influences that normally make a big difference. They just shrugged it off. Just like these headlines that we're seeing today, 873 plants being delisted on Sunday when the phase 1 trade agreement expires, if they've not come to some kind of terms prior to that point. That's a big deal. They're our 3rd largest beef buyer on the global market. What does that mean longer term?
What about hog plants?
Not sure what the numbers are per category, but it's 873 total, including pork, beef, and poultry.
Ah, okay.
Yep.
So they could be in the mix too. So hogs were mixed on Friday. They've had just a choppy affair. When you look at the daily charts here, they had a steep sell-off here about 3 weeks ago. And then they rallied here for about a week, and now they've sold off for a week again. I'm getting mixed signals out of that. It's holding above the 200-day moving average, but other than that, I got nothing.
Yeah, I mean, it seems to me the $100 mark in the summer months is the magic ticket. June probed above it one day. I think we traded to $100.35. And then you set back immediately. So it's obvious that there's hedge pressure lined up there for those that missed it the first time around. Maybe the second time around, they're not going to miss it the third time. And I think that's what we ran into this week. Cutout's been fairly supportive. The cash trade's actually been fairly robust as well. We are heading into the heart of grilling season. We might get one more push for the highs. but that's probably going to be all we can get for this time of year.
Well, okay. Thanks for all the information today as we look back on a very busy week here in the ag trade. And now we're turning our sights into the new upcoming growing season. Can't wait to hear your information, your reports from the Southern Plains and what you learn about what's going on down there. And I guess that won't be until this huge storm system goes through. Sounds like another one coming through maybe Tuesday and Wednesday of next week. That might bring more snow to the northern plains. We'll have to wait and see. But I think, again, Southern Plains may miss out. So can't wait to hear what you have to say. Eric, thank you again. Eric Relph with us from Comstock Investments. That'll do it for this episode. Thanks again for joining us. For our producer, Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.